You have to have a bit of banter anyway, so
Absolutely. Okay, folks. So just talking the S&P, kind of the go-to strategy we spoke about it was the ratio put spread. So I suppose we met this day last week, and that's what was going on. And we had said the next day when we seen the set off, either start selling puts or do the ratio put spread. My preference was the ratio put spreads, because if the sell off continues, we would benefit from that with the ratio put spread. So as it turns out, the market has kind of just rallied since then, not in a big way, just kind of grind higher. So as you can see now, it's filled the gap. So there's a big lesson in this again about, when you see gaps here, usually they get filled at some stage, and the S&P has now filled this particular gap. So kind of what has been going on in the last week? Well, there was loads of stuff going on. First of all, last Friday, we had the jobs data, which was worse than expected. And then there was revisions to the June data and to the May data as well, which caused the market to kind of get spooked a little bit. Then, of course, you had President Trump come out and say that the data was rigged and sacked the head of the statistics board because he felt that the numbers, they were lying, the numbers were wrong, and that they were Democratic appointees. And we kind of spoken about that, in my opinion, at least, I'm not sure you can really trust the data coming out of the US anymore, no matter what it is, because if you think about it, at the end of the day, those people are public servants. It's not as if when they get sacked, they can just walk into another high-flying job, and the pressure that they must be under to basically, I suppose, tell the government what they want to hear. And the issue with this is, folks, and the funny thing, the ironic thing about this really is, Donald Trump wants interest rates cut. He's hammering the Fed every day saying you should be cutting interest rates. Look what happened, bond yields, straight after that jobs report. So if we go back into the 10-year bond, where am I gone? There we go. That was kind of, this is what happened, the bond yield here on the day of that report. You can see it went from 4.36% all the way down to 4.2% in one day. That does not sound like a lot, but it's a huge move in the bond market, okay? So he was actually getting what he wanted from the jobs report. And then he's telling them to tell it, you're not telling the truth. So he wants it every way, I suppose. He wants a really strong economy and interest rates to be cut with no inflation. But as we know, the policies he's pursuing at the moment are inflationary. It's really put the Fed in a bind. But what we had last Friday as well is one of the Fed governors resigned. So you would assume they're going to be appointed by another Trumpite. So that will be 3 on the board that are Trumpites as such, that will vote for interest rate cuts. And then, of course, we know Jay Powell will be gone next May. So that'll be a 4th one, I suppose. So I think that's why we spoke about TLT. That, eventually I feel he's going to get his way. So remember what TLT, it's an ETF that tracks the 20-year Treasury bonds. And I just want to speak about this for a second, and then I'll go back to the S&P. Let me bring up bond yields just for a second again. So when bond yields go down, the value of TLT goes up, okay? That's all you need to know about that. So if you think interest rates are going to fall and get cut, well, then TLT is a good investment, okay? A couple of other things you need to know about TLT. You can see here there's a lot of dividend payments. They pretty much pay a dividend every month. Not every single month, but usually every month. And it adds up to about between 3.8 and 4%, depending on what price you're buying TLT at. So this went ex-dividend on Friday. So some of you might have been thinking, okay, well, if the bond yields fell so much on Friday, why didn't TLT jump more? And the answer to that is because it went ex-dividend as well. So if we go back just to last Friday, you can see it was up on that particular day 1%. But actually, it paid out a dividend as well of 33 cents on that particular day, or it went ex-dividend. So I just wanted to explain that. So you can see there it was up 0.9, but you've added on the 33-cent dividend, it was actually up 122 or 123 when you think about it. So anyone who held TLT on Friday, you would have got paid a dividend yesterday, I believe. So that's a couple of things just to be aware of TLT. So every now and again, right, you have these what I call go-to strategies. And in my opinion, if you look at TLT, I'm just zooming in here, you can see it over the years. It's kind of, we're really down around its support area, okay? Now, there is a big paradigm shift at the minute. We do have inflationary pressure, so we got to bear that in mind. But assuming Trump gets his way, you could expect TLT to be in the mid-90s at some stage over the next 6 to 12 months. And that's the reason for purchasing it. And because it's an ETF, and because it tracks interest rates, and it doesn't move that much if you think about it here, like I am saying, you can allocate 20% of your portfolio to this, okay? 10 to 20%. Everybody will be different. But people who bought TLT outright and have it in their account are fine. Just hold it. You have nothing to do. But people who are based in Europe have to actually sell put options in the Interactive Brokers platform in order to try and get assigned on TLT. So what a lot of people did last week was sell I'll bring up the option chains now, the TLT 8750 puts, because I'll go back just for a second here now and I'll just show you something. So we go back to this chart on TLT, and if we actually go back to, I think it was last Thursday, we were looking at it. TLT was trading at 86, 87, just under $87. And it was on this day that people started selling the 8750 puts, thinking, you know what, we'll get a sign, no bother the next day. And in fact, there was no assignment, but you still made a significant profit on that. I know a lot of people were taking in nearly, in some cases, $100 a contract, actually selling that 8750. So on one day, people were making, depending on how many you sold, I know a couple of people made 5 or 6 grand on it in one day. So
that would have been a Friday expiry, would it?
Yes, it was the next day expiry.
Okay.
Michael, yeah. And thanks for clarifying that. So this is what I call a go-to strategy. So my view on TLT is right now, I think when the data keeps coming out, guys, I think the bond yield is probably going to creep back up here again. So I think you're going to get another chance with TLT. I'm not saying that people that own it sell it. It's a long-term buy and hold thing for you guys, right? But for people who were in this short put option, did not get assignment, this is your go-to strategy. So your go-to strategy on TLT will be when it drops down to around 87, I would suggest here. My view would be start selling the in-the-money put options on it again. So you can see it touched it yesterday. So my view would be sell the 8750 puts for the next day and hope to get assigned. If you don't get assigned, just think about it. You've made that premium as a claim profit in one day. Okay. So we looked at it right now. TLT is at 87.75. It's probably a bit high. That's tomorrow's expiry. What will we be getting on the put options here? Probably very little, I would imagine. You're getting $17 a contract, so it's not really worth doing. Okay, that's why I'm saying maybe just wait. You could maybe look at the 88 one if you wanted, and take in $40 a contract. But I think I'd much rather be closer to break even at 87 getting into this thing myself. Okay, so the go-to strategy is when TLT drops to 87 again, sell the 8750 put. You should take in about $70 a contract when that happens, okay, for the next day. And then if you get assigned, great, you just hold the shares. If you don't take assignment, brilliant as well. You've made your clear profit. Does that make sense? Has anybody any questions with that?
Thanks for clarifying that, Stephen.
No problem at all, Michael. Everybody okay with that? Super. So now back to SPY, right? So my view on the S&P is that I've said it for a while. I think this market is going to grind higher. You could interpret Donald Trump's interference with some of the data commissioners now as being negative, and you can also interpret it as being positive. It depends what argument you want to make. The positive argument will be, if you think about it, if he's going to start controlling the narrative coming out of all the jobs data, the economic data, eventually he's going to get what he wants, which is interest rate cuts with a strong economy. How he's going to get that, I don't know. But that will lead to a higher stock market. And if you look at earnings reports, which is ultimately what you should be listening to anyway, the majority of them have been very, very good. Yes, there's a lot of companies there have been impacted badly by tariffs. But the one thing I will say is that, and what I'm hearing over and over again, there is cost cutting going on, although it's not being announced massively. Maybe companies are trying to protect themselves against the wrath of Donald Trump. But there is a lot of cost cutting going on, and that's how margins are being protected. So if you think about tariffs, they're effectively a tax. Who's going to pay that tax? Is it going to be the company, or is it going to be the consumer or the business that are buying that product? Somebody has to pay for it. And at this moment in time, it looks like the companies are managing it, in particular pharmaceuticals, by cutting cost and trying to maintain their margins. So it's going to be interesting what the next group of earnings look like. Can that continue? You know, and that will be the question. But right now, my view is this market grinds higher over a period of time, but I would not buy the market here. And this brings me to my second go-to strategy. So your second go-to strategy should be selling puts on SPY or doing the ratio put spread, one or the other. So let me spell that out, because I know some people listening to this mightn't have a clue about options. So I'm going to try and just briefly explain very quickly. So when you sell a put option, basically what you're doing is selling an insurance policy. SPY is an exchange traded fund that tracks the S&P 500. In my opinion, it's the safest way to invest at the moment is go through an index, because trying to identify sectors that are going to be okay under the Trump administration is proven to be very difficult. We heard only the other day he's going after chip stocks again. So what's next? You know, it seems to be hopping and chopping and changing all the time. We know he's after pharmaceuticals. So for me, the safest way to play it is, if you are going to invest into an index like the S&P 500. By selling an insurance policy, you're effectively getting paid a premium now to agree to buy something cheaper in the future if it falls. So what I'm saying here is, I don't particularly want to buy the S&P here at 632. I don't like it there. I'd much rather, you know, if it was below 600, closer to 580, I'd probably have a go at it, assuming the economic data remains stable. So while we're waiting around for that to happen, you can sell a put option, or if you have this belief that the market might fall down there in the near future, you can do what we call a ratio put spread, which will allow you to profit more if it actually did fall, but just did not fall too much. Okay. So the ratio put spread we put on last Friday to take advantage of the market, you can see it's done quite well. We're up, where's our profit there? We're up $164 a contract in this already. I think we took in over $200, so we can make a max profit on this at 207. So what we did with this trade is we basically got paid up front for agreeing to buy the S&P 500 down at 600. But we also placed a trade that will profit big time if the market falls. We actually bought an insurance policy as well. So they're the two strategies, the two go-to strategies. I would recommend you keep doing until the market actually falls to a level where you go, do you know what? I'm ready to pick it up and buy it. Okay. So if it grinds higher, so be it. But I think you're better off being safe than sorry here. You just don't know what's around the corner with this thing at this minute in time. So I just thought I'd pass that on to you. Okay. Any questions on SPY, on the strategy, what to do or anything?
Just to comment on that, I went in and I did the 628, 618.
Yeah.
And I got under pressure. I had to roll out the 618 when it dropped.
Yeah.
And I got out as far as September 19th, down at 600.
Well, that's very good, Michael. So that's a great example. So what Michael's saying here is, and this is another great thing I love about this strategy, you can always change your mind. So what Michael's saying here, he did the strategy at different strikes than what we did it. And then when this day happened here, one of the areas started to come under pressure. So he immediately hopped in, took evasive action, and was able to bring his break even way down here, actually, just by rolling out and down. So that's the power of those put options and knowing what to do. So what he did was he bought himself out of the August insurance contract that he had sold at 618, and he basically opened up a new contract in September for 600. So the opening up of the 600 contract paid for buying himself out of the August contract, and it brought his break even down. So yeah, that was a good move, Michael. Well done.
There was no extra commission on on that. Like I just to break the same premium for rolling out as I got the first time.
Yeah, and that's because it was so tight there. So if you look, the low on this on the day was 619, and it was probably at that stage.
Yeah.
So this is what I'd say to people. When you place this type of a trade, give yourself with SPY as just a general guidance, a rule of thumb. If you're not going to take the assignment and you feel you'll be nervous, a $5 wiggle room will allow you to roll it out and down much further. So, for example, with our 620, 610 that we've got on at the minute, or sorry, my apologies, the 610, 600 that we've got on at the minute, if we got to 605 down here, at that time, I'd be saying to you, roll out and down if you don't want to take the assignment, okay? So that's just a rule of thumb. And what that allows you to do is to roll it out and down to a much lower strike. Because on this particular day, Michael's 618s was like only $1 in the money.
Mm-hmm.
He wasn't able to roll it down as far. He got down to 600, which is great. But, you know, maybe he would have preferred to 590 or 580 or whatever at that time.
Yeah.
So that's just, you know, and the minute you start going in the money in those short puts, it's virtually impossible to roll them out for break even. So it's just something for you to be aware of, okay?
Yeah.
So the other thing, guys, just a couple of stocks there. KRX, we were watching. So mea culpa here. This is something we were looking to buy, and I was saying I'd love a little drop, pull back here, maybe to the low 80s or whatever. Great earnings overnight. It's up 8%. It's going to jump up to 105. So that's coming off our watch list. Not looking to buy that anymore. Kingspan has come to this support area again and bounced off again, but be wary, it's still in this downtrend. Okay, earnings are out next week, I believe, Friday week. So we'll see. Again, this is one that you could probably buy now, right? And then buy half, but only buy half your allocation now, and then jump in and buy another half if earnings are bad. Okay. But KRX had really good earnings last night, and the stock has jumped. Other stocks I want to mention, just Alaska Airlines is another one we want to buy. I really still want to get this in the low 50s if I can. So still kind of just waiting. It's just meandering sideways. Google is one of the stocks we own, flying high. Keep holding it, in my opinion. Analysts have now increased their target price. They only had a target price of 200 on that last month. It's jumped up to 223 now. So analysts are starting to increase their target price in Google. So I hold that one. No need to talk about Tesla. This is the one now I think we could start thinking about jumping into, Icon. So again, a great reason why you don't buy straight after earnings when something has jumped. So I don't know if some of you remembered earnings here. The stock jumped and jumped. I was getting a lot of text, should we jump into Icon now? And I was saying, no, wait, see, does it give back some of the gains? Look what's happened since. So just on earnings, this was at 150. It went up as high as 210, let's say, and it's now back at 155. So within the space of 2 weeks, it's given away all the gains it's made from earnings, and it's right back down at where it was pre-earnings. So now I'm interested in the stock. We have a target price of over $200 on it. It has got there before. I think it'll grind up there again. So all I'm waiting on now, folks, is this. I'm waiting on these lower lows to stop. So what I mean by that is you can see that the low yesterday was lower than this previous low, and so on and so forth. And the highs are getting lower too. So when that trend stops, maybe it'll do a little bit of this here. Then I think we buy into it. Okay. So that's all I'm waiting on. But Icon is on the list to buy. It's another one that if you wanted to and you didn't want to wait around, if, for example, you were going to put $5,000 into it, you could put 2.5 in today and then wait. If it does fall down lower, so be it. Let's say it falls down to 140, you buy another half there and you average in. Okay. So that's Icon. So this is one that's probably going to be purchased next. All I'm waiting is the opportunity to buy. That's all. Any questions on those, guys? No. Okay. So before I move on to the equity scan, I just want to show you a couple of things. Just wanted to talk about natural gas. Natural gas made another low down here since we spoke last week. So this is one, as you know, and for those of people who are new to this, natural gas is like our risk play. It's something that moves like 20-30% for you. Okay. And we want to trade it via futures. People don't know how to trade it via futures. They can use an ETF called UNG. You won't get the same return, but you will still get a benefit from it. What I didn't like about it, it kept making lower lows, and it did get to this support area, I suppose. So far, it's bounced back off it, but I still don't trust it here, guys. And here's why. If this got to 250, I'd be saying, okay, let's take a punt here. So let's say you're going to allocate 15% of your portfolio to this. You could put in 7.5% here. And then if it did fall to 2, you could put in another 7.5%. And then you're averaging at 225. Whereas if you come in now, and let's say it drops to 2, you're averaging in at 250. It's well, so I've no doubt you would get out eventually. It might take a longer period of time. So another thing you need to be aware of is that this is a continuous contract here, right? If we went to the out and out September contract, and by the way, this September contract expires at the end of August. I know it's weird, but that's the way it goes. Look at the lows that were created. It took out this previous low going back here to November of last year. So these lower lows are still intact, even though we've had a bit of a short-term rebound. So we're still waiting on natural gas really to consolidate at the bottom before we consider buying in. But what I'm looking at down the line is, do you know what? Summer's nearly over. We're coming into the autumn period. Before you know it'll be winter. The demand for natural gas goes through the roof. We know natural gas is used to produce electricity. We know there's so many data centers being built at a rapid pace. You know that by NVIDIA's earnings and all the AI stock earnings. So therefore, the demand for natural gas, I think, is going to be strong. At the moment, supplies are building, and that's why the prices of natural gas are coming down. But I do think that narrative could shift quickly enough. If we got to 250, I'd be in. Okay. Any questions on that, guys?
Just a question on Icon there. Would you do the puts on that?
It depends on the size of your account, Michael. So if you look at Icon, if you did one contract of a short put on Icon, you're talking about 15.5 grand. And our rules are that you don't have any more than 5% in any one company. Yeah. So 15.5 multiplied by 20. Let's say your account would want to be over 300 grand in order to do a short put on Icon.
Okay.
If you wanted to play it as a return-based strategy, you could look at a bull put spread or do a very far out of the money short put, Michael. And just be prepared to roll out and down if it starts going against you. Okay, so just wanted to focus in on equity scan there. It's back up and running, guys. As you can see, that it's been updated every day, twice a day, sometimes 3 or 4 times a day. Something I want to show you in this that you might haven't done in a while. I'm just going to clear all filters. Let's say you're looking for maybe stocks that might be oversold and have big upside potential. The first thing I do is go and start searching via RSI. So we apply that filter. You can see what happens here. There's 50 stocks in the database with an RSI below 30. So we know RSI below 30 means it's extremely oversold, okay? Then you might want to screen for, okay, well then only give me stocks that maybe have an upside of greater than 25%, let's say. So that kind of brings your number of stocks down in the database down to 28. And then what you do is start going through each one yourself and start looking at what's unique to those companies, what's the risks with them, what's the potential reward. So obviously car manufacturers, Renault is there. You know what the risks are there straight off the bat. Here's one, Align Technology. So I don't know if you've ever seen the the clear braces, the Invisalign. That's what these guys do. Okay. Now, the reason I know a little bit about these is I've got 2 young kids looking to get the clear braces on, right? And the reason why I probably wouldn't go near Align Technology, the demand for this Invisalign is off the scale, but there's a competitor after coming out that actually is about 33% cheaper than Invisalign, the product that this company offers. And the braces are also less noticeable as well. So actually, it's a much better product at a cheaper price. And I just know that from having put 2 of my kids through it. For me, then, this is why I think their margins are coming under pressure now. And I think this might be just the start, unless they bring out some new products. So I will be careful on that one, let's say. So just again, you will go through each one there and start getting to know the companies inside out. Obviously, healthcare stocks, you're looking, there's probably insurance companies there as well. There's risks and reward potential for all of them. And you've got to pick ones out that are right for you. So might be a nice little way for you to start looking at how to filter here. Just remember, when you're finished, clear all filters. Because otherwise it won't. You'll only get what's within that filter there. Okay, so it's back up and running. All the data is up to date and it's accurate. And certainly use it and look at the news flow that's in it as well. I just thought I'd bring that to your attention. Okay, folks. So what I wanted to bring to the table today was continue with the ratio put spreads on SPY, the go-to strategy on TLT. If you own it, hold it. If you want to add to it, wait for it to go to below 87. If you're a European investor, you haven't got a sign, sell puts at the 87.50 strike, but wait for TLT to drop below 87 before you do that. Icon is the next stock we're going to buy. We're just waiting for the lower lows to stop. That's all we're waiting on. If you want to go ahead and buy it now, nothing wrong with that. But only allocate 50% of what you're going to put into it. So if you're going to put 5 grand into it, only put 2.5 in today. Wait to see the lower lows stop before you add more. And we're talking about something similar here with the likes of Alaska Airlines and Kingspan here as well. You could adopt the same approach if you wanted there. So yeah, the downside of doing what I'm talking about doing, waiting, is we waited with CRH. Look what's happened. It's jumped after earnings, and we've missed the boat. So there might be it might be a better strategy to go 50-50 and just do it that way. Okay, any questions, folks?
Yeah, I'm good. Where would you wait for SPY to think about the puts again?
Okay, so if we got down, so assuming your existing contracts, Michael, are coming out and you're not getting overexposed, right? If we started retesting this low again, we know that the premiums jumped up brilliantly there. I would apply the same strategy again out to September. The hope would be, right, historically speaking, and I forgot to mention this actually, historically speaking, and it's not a fact, it's one of these almanac things, right? Now, between now and early October is the worst performing period for the S&P 500, historically speaking. It doesn't mean that's going to happen now, okay? I'm just letting you know, traditionally, the market tends to grind down. So I would certainly love to be positioned in the S&P before the end of September at some stage, if possible, and preferably at around the 580 level. Yeah. So the strategy I'm applying now gets me very close to that. So the 610-600 ratio put spread, that's the reason I like that one. I might be in at 688 or 588 or something like that, but I can handle that because I do think you'll see 6,500 by the end of the year, assuming now the economic data doesn't worsen.
You'd want it below 630 before you apply that, I presume.
I would want that at 620, Michael.
Yeah.
To get me the premiums, I'd love to whack out down day. And there's times we were doing this, we were getting like $400 a contract. At the moment, we're only getting $2. So you have to, I suppose, take what you're being given. And bear in mind, we actually want to go long as well, you know.
Yeah.
So I would probably use 620 to 610 as my benchmark for actually applying the strategy.
Yeah. Yeah, it's been good to us, the SPY.
It's good. Look, statistically, guys, this strategy has worked 94% of the time. You know,
Yeah.
they're the stats. Like, it works. It's an income generator while you're hanging around, you know, and I'd say you stick to it. And you can use that with TLT as well, by the way. This is an income generator in two ways. First of all, a dividend. Second of all, the sharp up premium you're getting. So, like, I think this is going to come bubble over a period of time. I think you will probably make about 10% gain just on the capital move that it's going to make. But possibly more between the dividend you're going to get and all the short put premium you might get before this event happens, you know. So that's why I kind of like that trade. Timing it is impossible, as you know. But I like it where it is now. It makes sense, makes financial sense.
Okay.
Any other questions, folks? No? Okay. Have a great day, folks, and we'll chat again soon.
Have a good weekend. All. Take care.
Bye for now.
Hey, thanks, Stephen.